Welcome to the Joe DeLisi Financial Advisor Podcast. I'm Joe DeLisi. Let's talk about artificial intelligence today. For some of you, you see this title and you just go right by it. You don't want to look at it. You don't want to think about it. Others of you have no idea what it even is. When I just have conversations with friends and family, we were at a wedding recently and we were in this, subject came up in the context of finance. The reality is nobody really knows what's going on. There's just a lot of speculation. So I've been getting this a little bit from clients. How is this going to impact us? How is it going to impact the portfolios? How is it going to impact our money? And so I thought I'd give you my thoughts for what they're worth. I do study it. We look at it a lot. We're constantly looking at how can we utilize tools like artificial intelligence to make how we invest for you better, how we build your balance sheets and how we build your financial plans and your exit strategies. How can we make those better? How can we communicate more effectively? So these are things that we're obviously looking at. But specifically today, I want to talk about maybe some of the fear around artificial intelligence. This is going to be kind of a work in progress, several different notes here, jumping back and forth from laptop to tablet. I will say this, that generally speaking, what I've seen, because I listen to a lot of podcasts, I read a ton of articles, especially on the weekend. It's weird. I can almost see people's, I don't know if it's political persuasions, but kind of it is. I can almost see that coming into how people view or think of artificial intelligence. Anecdotally, what I'm seeing is that the extremes, at least from a political standpoint, so the far left, sort of the communist or Marxist, not even so much socialist, but really far left, they're looking at either this is utopia or dystopia. I mean, and it's extreme. They're talking about, complete replacement of all human beings and all that kind of stuff. The far right also has their view of it as well, and they tend to lean towards either utopia or dystopia. So it's like on the extreme edges, regardless if they're left or right, they tend to have just, again, very extreme views of this. I'm not a scientist. I'm certainly not a scientist in the world of artificial intelligence, but I am noticing that when you listen to more kind of centrist economists, more rational kind of free market thinkers, and these are on both sides too, right? These are Democrats and Republicans that I'm listening to, both in the current administration and outside of the current administration, just kind of looking at things. They actually tend to agree. While I haven't seen anybody on a panel agree, the way that I'm reading and kind of piecing things together, they're kind of in agreement on this. Hey, this may not be the way we thought it was. So I just see a much murkier path than dystopia or utopia on artificial intelligence. I think everything's going to change, but it won't be when or how we were being told it will. So where am I getting some of this stuff? I looked at a few different pieces, specifically the Wall Street Journal and New York Magazine. Now, you can tend to look at New York Magazine being maybe a little bit more on the left-hand side. The Wall Street Journal tends to be a little bit more on the right-hand side. So I wanted to pick both, right? I didn't want to cherry pick just things that, might satisfy whatever I think. I want to look at large swaths. This is what we do every time we're going to look at how it works with your portfolio. So the Wall Street Journal, kind of the headline is that the AI's big leaps are slowing, and that could be a good thing. Now, when was this published? So you can go look it up. The journal was on August 24th. This would be 2025. And a couple quotes that I grabbed out of this from the journal. Quote, experts suggest that true artificial intelligence transformation in industry will be a decades-long process, much closer to the adoption of the internet. Also, quote, this slowdown may actually benefit businesses by providing a more stable environment to adopt and integrate AI tools. This is sort of a growing industry belief that the structural transformation is going to play out gradually, like over decades. Now, that caught my attention because, we're all living through this together right now, but I was a new advisor in 98, that 2000 kind of .com era where we sort of went through this. And what's interesting is if you look back, even though there was a lot of bust, obviously, like that decade, 2000 to 2009, the end of 2009, the S&P 500 was actually down over 9%, almost 10% for the decade. 2000, 2001, 2002 were all negative years. 2008 obviously was a big travesty as well. So that was a rough decade. But what's interesting is that what we were being told would happen kind of happened. It just took a lot longer. We were told that the internet would change everything, and it did. But it didn't happen in 18 months or 2 years. The new economy that I was being taught as a young advisor, where stocks would never go down again, like that didn't happen. Companies were laying unbelievable amount of fiber optic cable, way more, now we know, way more than we ever actually needed or could have used in anticipation. So companies were just like in this arms race of laying cable and trying to win the internet revolution. And what was interesting is that while some of the companies that were big back then are still big now, I'm just thinking like Apple and Microsoft, maybe Cisco, things like that, there were a lot of busts. So we don't know who's going to win. Nobody knows. NVIDIA is the largest chip maker right now, and they've got this crazy return, but we actually don't know if they're going to be the largest and most profitable chip maker in 10 years. We just don't know. And so the Wall Street Journal is kind of saying that, like, hey, we're being taught that AI is going to radically change everything and robots are going to take over the world in 6 to 8 months. Like, that's probably not going to happen. Now, the New York Magazine, this one was released on August 21st. You can go pull this one up. The New York Magazine, they were more also kind of tempered hype, and it's going to be incremental. So, quote, suddenly Silicon Valley is lowering AI expectations. OpenAI's Sam Altman acknowledged that investor enthusiasm for AI might be overblown, drawing parallels to past tech bubbles, unquote. They go on to say, quote, this signals a potential shift in the AI narrative from boundless hype to more measured expectations, unquote. So same storyline, right? As recently as a couple months ago, maybe even a couple weeks ago, we kind of thought that, when I say we, I mean the collective we, just out there, that AGI was imminent. That artificial general intelligence was it was right here. It was at our front door knocking, and all of us would be put out of work. And then they launched Chat GPT 5, and it was sort of underwhelming. And again, I'm not an expert in this area. I'm just sort of reading the tea leaves of what I'm seeing out there. And I'm not trying to predict anything. I'm just looking at the past, because, we may not repeat the past, but usually history rhymes with what's going on now. And so we're seeing like all these promises and, everything's going to change overnight. And yet practically it's not. It's happening quicker than, the Industrial Revolution moved, of course, but it's not going to necessarily be this flash that happens overnight, and that you should worry about, in my opinion. There's one more here. And this is the Harvard Business Review. And, this is sort of like burying the lead. Quote, the AI revolution won't happen overnight. Now, that came out in June 24th, 2025. And I grabbed that one just because I didn't want to just come up with the ones that happened or released in the past week or two after ChatGPT. Why are we talking about this? Why am I bringing up artificial intelligence and reading you quotes from industry gurus, we'll call them, when I'm a money guy? And the answer is really twofold. One is that I think what's going to happen, if I look back to the past and compare that to today, I remember again as a young man that a lot of my clients were very concerned that they were going to lose their jobs. And they really didn't. Their jobs changed. They adapted. Most of them made more money than they thought they would because of the internet. And so you might be thinking about this too. Like, oh my gosh, am I going to be out of work next week? Nobody knows. Nobody knows the future. But what we were being told was that it was imminent and that the robots were coming. And maybe they are. I mean, the reality is this. If you talk to anybody who tries to tell you what the future is going to hold, ignore them. They don't know. I don't know. The people doing it don't know. This is going to evolve a little slower than we thought, just by looking at kind of what's happening out there. There's no runaway winner in AI right now. There's a lot of different companies in the mix. They're all doing different things. They're in different categories, which is exactly how free market capitalism works. So as it pertains to your portfolio, you might be thinking, well, are we taking advantage of early mover artificial intelligence companies? We are. We're just not speculating on individual positions. We're in small cap companies, both growth and value. We're in large cap companies. So the Terrific 2 this year, like we talked about last time, it's not the Mag 7 at the recording of that. It's the Terrific 2 this year. We own those in portfolios. We own companies inside your international portfolios and your emerging market portfolios you've never heard of. Because the truth is nobody can predict the next NVIDIA or the next, OpenAI if they were to go public. Nobody really knows which companies are going to be the winners. We thought pets.com was going to be a winner back then. We thought AOL was going to be the winner, and WorldCom, and in a different segment, Enron. And we kind of know how that stuff worked. The reality and the beauty of this is we don't need to predict the future. We don't have to worry about who is going to win the AI battle in terms of companies. We're going to own markets. We're going to own several markets. We're going to tilt to risk premiums. We're going to rebalance your portfolio. We're going to look at how the markets are moving. And we're only going to change your portfolio based on your risk tolerance, depending on when you're going to exit the workforce or exit your business. We're not going to change your portfolio based on your brother-in-law at the wedding who's worried about AI. Not that my brother-in-law was. We actually didn't talk about that at all. It was somebody else at the wedding who brought it up, and I kind of got stuck in a conversation that I quickly ran out from. So for today, I wouldn't worry about artificial intelligence. It's really the extremes that are freaking out right now. The people that are more nuanced are on both sides of the political aisle and both sides of the way they think. Really, as long as they're looking at it in terms of free market capitalism and how companies operate, I think it's a more nuanced view. And this will take time. And so we're here for it, and you're going to get the growth inside the portfolios, and that's it for today.
Registered representative and financial advisor of Park Avenue Securities LLC, past OSJ 5280, Carroll Canyon Wards 300, Tandy Eagle, Cal 92121 619 648 6400. Securities products and advisory services offered through past member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian New York, NY. Pass is a wholly owned subsidiary of Guardian. Westpac Wealth Partners LLC is not an affiliate or subsidiary of Pass or Guardian. Insurance products offered through Westpac Wealth Partners and Insurance Services LLC, IDP of Westpac Wealth Partners LLC. CA Insurance License Number OD 34103. This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations differ. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guardian subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Guardian and its subsidiaries do not assure advice with regard to mortgages, property and casualty insurance, and our car insurance. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. Diversification does not guarantee profit or protect against market loss. Equities may decline in value due to both real and perceived general market, economic, and industry conditions. Investing in securities of smaller companies tends to be more volatile and less liquid than securities of larger companies. Investing in the bond market is subject to certain risks, including market, interest rate, issuer credit, and inflation risk. This material is intended for general use. By providing this content, Park Avenue Securities LLC and your financial representative are not undertaken to provide investment advice or to make a recommendation for a specific individual or situation, or to otherwise action a fiduciary capacity. Past performance is not a guarantee of future results. Indices are unmanaged and one cannot invest directly in an index. A33963.1 expired 927.